There are a few investment opportunities that I wouldn't consider, and this is one of them. And I have a somewhat bigger risk appetite than other investors I know. There are certain investment products that I don't think retail investors should consider. This is one that contains a lot of risk. This product is great for the founders but not as good for the shareholders. What is it? It is a SPAC. What is a SPAC? Let's dig in. SPACs are basically a blank check company, in which the founder or manager collects and pools the capital from a group of investors. The purpose of this is to target investment opportunities in specific target areas, to be named, at a later date. However, during the capital raise, there is no intended target, or any target shared with investors. The SPAC manager gives a window, typically 2 years, to find a target investment for the capital. If a suitable investment isn't found, the money is returned to investors. But again, the SPAC manager finds an investment, or gives back the money and fees to the investors. Giving back the investment isn't something a lot of managers like to do. So there is a high probability the manager will find a deal, whether or not it's a good deal or investment. Incentives are another issue. All the big names are now looking to start their own SPACs, in an effort to get large pools of capital. However, their incentives are to make a deal work, otherwise they run the risk of losing the fees, and reputational risk for not getting a deal done. SPACs are pitched as a way for retail investors to get access to future great companies before they go public, allowing retail investors to get in before the IPO price. While this is possible, it's also not likely. Keep in mind, most professional venture capital firms have a lot of deals fail as well. They place a number of calculated and diversified bets so they can get huge returns on the deals that succeed, to make up for the ones that fail, and ultimately achieve an acceptable return on the investments overall. However, not every SPAC-acquired company will succeed. And if the SPAC doesn't have enough capital to diversify, or is in a segment that is ripe for disruption, or picks an acquisition target that is equally disruptable, or outright acquires the wrong target, then what happens? You lose. But does the manager lose? This is your issue as the investor, and somewhat less as the manager concern. Why? The manager will be collecting fees, which will misalign your interests. The fees on SPACs typically have a percentage fee, and flat fee of 3 to 5%. Plus the manager also gets additional shares of the acquired company. These additional shares are on top of the fees. This block of additional shares is called the promote. The problem lies in a big promote which dilutes shareholders. Here lies the problem: fees are good incentives when aligned with shareholders, but dangerous when the agent or fiduciary becomes misaligned with the investors. Read the investment disclosure materials carefully. There is nothing worse than capital losses from investment losses. The cruel math on investment losses, to make back what you've lost, is painful. It's not something investors like to calculate. Plus you're looking at opportunity cost, of where that capital could have been during this time. Don't make this mistake. Unfortunately, SPACs are one of the latest and hottest trends in finance today. 2020 was called the year of the SPAC, as it saw more SPAC capital than any other year in history. It's difficult for investors, both new and seasoned, to miss the headlines of the returns on some of these SPACs. Some have seen ridiculous returns immediately after IPO. The takeaway is SPACs are better for those running the SPAC, and much worse for the investors. This is a dangerous and often money-losing place in which to invest. But don't fall for the head fake. Don't fall victim to the greed and fear of missing out. There are enough incentive misalignments, and potential losses from this type of investment. I personally will never buy SPACs, and I hope you now understand how dangerous for new investors they can be as well. Thanks for watching.